Joining me now, Menden Capital Advisors President and CIO Anton Schutz, founder of Michael Lee Strategy, Michael Lee, and ER Shares CEO Joel Schulman. Guys, good morning to all of you. I hope you had a restful weekend because we've got this to deal with this morning as we kind of kick off our Monday. You've got the Dow down 360, S&P down 33 1/4, NASDAQ down 56 3/4. You've got the 10-year falling to 1.25%. That is a 5-month low. That's an interesting story. And then you've got this survey from the Wall Street Journal saying the economic recovery is going to slow down. You've got economists expecting the post-pandemic boom to peak, to have peaked in the spring. I want to bring in Anton on all of that. In particular, Anton, I'll bring to you in on oil prices because we've got a huge slide this morning, more than 2%, but there's a reason why. OPEC Plus and its allies did agree to boost output over the next 2 years, and they are expecting global demand to rise, which I think is a fair expectation. But this is kind of that inflation story from the energy perspective, Mike. You know, we've been talking about so much worry about what consumers are paying at the pump, for instance, and businesses. This might take some of the pressure off.
Yeah, well, when this really started with the election, and when the more clear it became that Biden was going to take over, and then the cancellation of the XL pipeline, the price of oil just took off like a rocket ship. So that's one major factor. The other major factor is the economy coming back kind of a lot quicker than most people had imagined. And now that people are getting out and about, a lot of driving is going on. It's there's reduced capacity in the airlines. People are going on long road trips. Trucks are moving all across the country delivering goods. So from a demand story, that's really picked up kind of ahead of steam. And then as this was happening, we're still dealing with a reduced supply of oil, and then OPEC has been going back and forth trying to figure out the best way to deal with that, where they can make the most amount of money. And they were able to come to an agreement yesterday about production increases over the next few years and how that's going to look. So hopefully we've seen the short-term highs for oil, but I will say, the higher the price of oil goes, the more it is a tax on the lower and middle class, and a lot of that's becomes pushed down through consumer goods to the end consumer. So it'd be good to see oil drop, another 15 or 20% from here for the overall economy. So we'll see how that plays out. But I imagine we'll have elevated prices of oil for some time, being that it is run by a cartel.
Okay.
And the fact that the U.S. is making a lot less of it.
Well, then let me ask you this. Then let me ask you this, Mike. Let's pick up on that, because if OPEC is now the story again, right, and we're worried about what's happening overseas, what about shale production in the U.S.? And I'm asking you as a stock picker. Maybe we need to look at that group again. I know that the Biden administration has been, anti-U.S. production with Keystone Pipeline. They've cut that off, all that. But at the same time, we're now under the thumb of the Saudis again. Maybe that's a good story on the market side of it, on the market perspective.
Yeah, absolutely. The oil stocks, I prefer to play that through the XLE. That's performed pretty well. The other way to look at is through some of the oil service producers, and I would use the exchange traded funds to play that as well, because the servicers have not moved as much as the underlying. But the oil sector it's a tough. It's a small sector of the S&P 500. It's made a tremendous move. Maybe we've seen the peak in that for now.
Interesting. All right, Joel, I want to get to you on